live there, live here. We're live everywhere. 630,000. That's how many more sellers there are than buyers right now. It's the biggest gap ever recorded in U.S. history. And this week, Fannie Mae quietly changed the way that you can buy a house forever. I'm Shersher. This is your weekly buy, invest, sell update, the fastest 12 minutes in real estate. Today, the record seller gap and what it means for your negotiating power. The crypto mortgage just went mainstream, huge. And why refi demand has collapsed 40% in a single month. And our Jacksonville market snapshot. Let's go. All right. As of February 2026, there's an estimated 46.3% more buyers than there are sellers in the market. About 630,000 more sellers. This is the largest gap since Redfin started tracking this statistic back in 2013. This is up from 29.8% just 1 year ago. It's officially been a buyer's market since May 2024. Almost 2 years. Months of supply, which looks at how long it takes to clear the current inventory, the current homes at the current pace. We're above 4.5 months, which favors buyers tremendously. Active home buyers fell 2.4% month over month in February to 1.36 million. Sellers dropped only 0.4%. It's a tremendous imbalance, and it's been growing steadily since May 2024. Strongest buyers markets, Miami. We have 163% more buyers than sellers. Sorry, more sellers than buyers. Nashville has 120% more sellers than buyers. Austin has 112% more sellers than buyers. And West Palm Beach, 110%. San Antonio, by the way, 104% more sellers than buyers. One of the reasons that the Sun Belt is so affected is there's a lot of post-COVID building during the pandemic. So they have a little bit of an oversupply situation. The Northeast, on the other hand, remains seller favorable. They have tighter supply, less new construction, sharp contrast to the Sun Belt. It's a very strong seller's market in the Northeast. Another point to mention, canceled contracts. Okay, this hit a record high in February. Another signal the buyers are walking when the math doesn't work. So if you're a buyer in Miami, Nashville, or even Jacksonville right now, which is a little bit more of a buyer's market than a seller's market, you have more negotiating power than you have had in about a decade. The question is, can you afford to use it? Let's move on. Mortgage applications. Now, total mortgage application volume fell 10.4% just for the week ending March 27th. This is a third consecutive week of 10% plus declines. The reason why, 30-year fixed hit 6.57%. It's down a little bit to that today, but this is the highest since August of last year. The Iran war is driving oil prices up, inflation fears are up, mortgage rates are in step up. Purchase applications fell 3% for the week, just 1% above year ago levels. Year ago, we had high interest rates as well. FHA, VA purchase apps are holding up better than conventional. Our refi demand dropped 17% for the week. It's down 40% versus a month ago when the rates were significantly lower. We're still 33% above the same week last year because rates last year were higher. Now, the spring market's trying to bloom, but rates are throwing cold water on it. And it sucks because the spring market usually is the beginning of a very strong market, but where there's a lot of macroeconomic factors right now that are throwing cold water on it. So here's who's still moving. FHA, VA buyers, man. If you are selling to these buyers, we just closed on a property just this week to a VA buyer. It took longer to sell to them. VA loans are slower, a little bit more complicated. But if you're selling to these buyers, you're in a better spot currently. All right. Very interesting news For the first time in the U.S. mortgage market, Fannie Mae has agreed to accept crypto-backed mortgages via partnership between Better Home and Finance and Coinbase. Buyers can now pledge Bitcoin or USDC as collateral for a down payment loan without selling the crypto or triggering capital gains. A lot of people have a lot of crypto that they've made a lot of money on and they can't use it. They have to sell it in order to use it as collateral to get a mortgage, to get a house. That is now changed for the first time ever. Now, how does this work? You get two loans. First, you get a standard Fannie Mae conforming mortgage, and then you get a separate crypto collateralized loan for the down payment. So your crypto collateralized loan is in second position, and you cannot sell the underlying crypto while this mortgage is in place. Now, there's no margin calls. The terms don't change if the crypto drops. Liquidation risk is only after a 60-day payment delinquency. You stop making payments for 2 months, then things start escalating, same as conventional. There is a rate premium. It's about 0.5 to 1.5 percentage points above the standard 30-year rates, which, yes, in today's high rate environment, it makes it a little bit less attractive. You do need a Coinbase account. Only Bitcoin and USDC accepted currently. And the crypto stays in custody for the life of the loan, as I mentioned. Over 10% of millennial and Gen Z buyers already sold crypto to fund down payments, according to a 2025 Redfin survey. So this program lets them keep the asset. It's cool. It's very next generation. Crypto basically just walked into the mortgage market wearing a suit. Fannie Mae stamped it. If you got Bitcoin sitting there and you want to buy a house, you might not have to choose whether to sell that Bitcoin anymore. All right, let's talk briefly about Jacksonville. Our median price in Jacksonville is our median listing price is $285 to $295. Okay, Jacksonville's officially transitioned more into a buyer-leaning market. It was fairly flat for the last year and a half. Since the rest of the country has gone into a declining market, Jacksonville has very much been a steady market for us. This is a pricing and negotiating market, not a momentum market. So right now you have more sellers than you have buyers. Inventory is up 39% year over year. So that gives you more options, more leverage for buyers. Okay. 66% of the homes there are selling below list price, which is a combination of two factors. Number one, people are just listing it too high. And number two, the homes are not in great condition, okay? And that's what I'm doing there. We are selling mostly to the lower end income levels, and our homes are flying. Why? Because we're putting good product out there, renovated homes. Median sold price, $300 to $322K. Average home value is about $282,367. We're down about 3.6% year over year. Once again, that's median. That's median. Bottom line is this: Jacksonville's not crashing. It's correcting. It's stabilizing a little bit. Inventory growth is the main headline. Buyers have real negotiating power there. Okay, and sellers, you got to price it correctly, or you're going to sit. That's not just in Jacksonville. That's everywhere. For disciplined investors, okay, I consider myself that a little bit after all these years. There's less competition. There's more leverage. There's better entries. Be very strategic with your acquisitions right now out there. This market is not exciting anymore, but it's interesting. And so there's less competition. A lot of people, the buyers have kind of panned away from purchasing, not just there, but throughout the country. They're taking a break. They're watching. They're taking everything in. But this is where disciplined investors win. And we're still buying actively in Jacksonville on a regular basis. We just picked one up 2 weeks ago, picked another one up a month ago, sold, flip. So looking for our next one. If you got a home in Jacksonville you want to sell and it's not overpriced, I'm interested in looking at it. All right, let's take a look at today's rates. All right. 2 weeks ago, the 30-year fix was at 6.53%. We're now at 6.45%, down 0.808 bips, as they call it, or 0.08 percentage points. It's a favorable move. The 15-year fix went from 6.07 to 6.02, down 5 basis points. 30-year jumbo went from 6.63 to 6.6, down 3 basis points. Your FHA is down 9 basis points from 6 to 5.91, and your VA is down 8 basis points from 6.01 to 5.93%. Rates dipped modestly from their spike, which was on March 20th. The 30-year fixed was at 6.53, but they still remain high. Okay, the 30-year hit 6.57% midweek before pulling back. The war-driven inflation is the ceiling on relief. It's uneasiness in the markets. Just this week, the market went up. The Dow went up 1,000 points in one day when there was some news about the pending end of the Iran war, and so the markets are just waiting for this to subside, to complete, for us to pull out of there, and then you're going to see a big drop. Okay, Fannie Mae projects a possible move between below 6% in the second half if inflation cooperates. Okay, all right. Quote of the day. Let's get back here. Stop sharing. All right, awesome. It's by Mark Twain. The secret of getting ahead is getting started. Okay, biggest deal killers aren't rates, prices, or inventory. They're paralysis and overthinking. We have a saying in real estate: paralysis of analysis. Overthinking will make you lose the deal to someone else who pulls the trigger. And some of the best deals, man, I've lost because I just waited a little bit too long to just check that extra box. So if 80% you're there, pull the trigger. If you know it's the right move, if you feel it in your gut and you're 80% there, be careful not to lose the war. Whether you're a buyer waiting for the perfect moment, a seller stalling on preparations, or an investor frozen by analysis, which I've been multiple times, market keeps moving without you. And so one way to make sure that you are able to jump when the feeling is right, when the opportunity is right, get pre-approved, pull your comps, make that offer. Action compounds, inaction doesn't. All right. Appreciate you guys tuning in, spending the last 12 minutes with me. This week's takeaway, remember, 630,000 more sellers than buyers, okay? Crypto just entered the mortgage market. Rates are still elevated, but they're improving. If you're a buyer in the right market, you have leverage you haven't had in a decade. This is a great time to buy. If you're waiting for those rates to fall, guess what? Everyone else is too. And what's going to happen when they all jump in, when you want to jump in? All of a sudden, these prices and your negotiating power will disappear. If you're a seller, price it right the first time. I cannot emphasize this enough. You're oftentimes your first buyer is your right buyer, and you're going to turn them off from the beginning, and you're going to lose that buyer. That quick sale is what makes you the most money, not that extra $10, $20, $25, $50,000 that you want to overprice your home. The data is clear on what happens when you don't price it right. All right, share this video with one person who's house hunting or thinking about selling right now. DM me for my free guide that I wrote on how to buy right like the volume purchasers like myself. It'll save you tens to hundreds of thousands of dollars. Link in the description below. If you've got value from today's update, hit the subscribe and tap the bell, please. I drop this every single week, so you never have to miss a rate move or a market shift. It's free, takes 2 seconds. Please, guys, if you like this video, share it, tap the share button, send it to one friend or family member who needs to hear this. It costs nothing. It genuinely helps. Our viewers are increasing up, because I'm being told this information is very valuable to you. I really appreciate it. Remember, if you're a buyer, seller, or investor right now, drop a comment down below. I read every single one, and I will comment back. I give you my word. This is Shersher, your #1 online resource for buying for buying real estate in this amazing buying market with your BIS weekly update. Have a great weekend.